If you've been paying attention to the financial world over the last decade, you've probably heard countless stories about people becoming wealthy through crypto. Some people invested a few $100s and turned it into thousands. Others invested early in projects they believed in and saw life changing returns. But here's the problem: most people approach crypto like gambling. They chase hype, they buy whatever is trending, they invest based on emotions instead of strategy. And that's exactly why so many people lose money. In today's video, I want to share how I believe cryptocurrencies can be used as a wealth building tool rather than a get rich quick scheme. We're going to talk about practical strategies, risk management, long term thinking, and how ordinary people can potentially use crypto as part of their wealth accumulation journey. And before we begin, remember this: nothing in this video is financial advice. Always do your own research and only invest money that you can afford to lose. Now, the first thing you need to understand is that cryptocurrency is an asset class. Just like stocks, like real estate and gold, the wealthy don't simply work for money, they acquire assets. Assets have the potential to increase in value over time, and cryptocurrency is one of the newest asset classes available to everyday people. Many people dismiss crypto because it is volatile, but throughout history, every major innovation has gone through periods of uncertainty. The internet did, technology stocks did, and even railways did. Today, blockchain technology is creating an entirely new digital financial infrastructure. Crypto will definitely explode in the future, and there's no denying that it has become a global asset class that investors can no longer ignore. The first mindset shift is this: don't view crypto as a lottery ticket. View it as an asset that can potentially appreciate over time. The second strategy I want to talk about is to focus on accumulating quality assets. Now, one of the biggest mistakes new investors make is buying hundreds of random cryptocurrencies. They own 50 coins, 100 coins, maybe even more, but they don't understand any of them. Instead, you should focus on quality. Many successful investors focus primarily on larger, more established projects, projects with strong adoption, strong communities, strong development activity, and proven track records. Think about it this way: if you had to choose between owning a small unknown company and owning a stake in a globally recognized business, which would you choose? The same principle applies in crypto. Quality matters. Accumulating quality assets over time often produces better long term results than constantly chasing the latest meme coin. Now, don't get me wrong, I have nothing against meme coins. In fact, I'm going to talk about meme coins later in this video. What I'm saying is that buying every meme coin that appears on your social media feed is not the best way to build long term wealth. The third strategy I want to talk about is the dollar cost averaging method. One of the most powerful wealth building strategies is called dollar cost averaging, DCA. This simply means investing a fixed amount on a regular schedule. Instead of trying to predict the perfect moment to buy, you invest 50, 100, or $500 every month. When prices fall, you buy more units. When prices rise, you buy fewer units. Over time, this helps smooth out market volatility. The truth is that nobody consistently predicts market tops and bottoms, not even professional investors. Dollar cost averaging removes emotion from investing. It turns investing into a disciplined habit. And wealth is often built through consistency rather than brilliance. Now, the fourth strategy I want to talk about is to think long term. Many people enter crypto hoping to become rich in a few weeks. That mindset usually leads to disappointment. Real wealth accumulation often takes years. Think about the investors who accumulated assets through multiple market cycles. Many of them endured crashes, bear markets, negative headlines, and periods where their investments were significantly down. But they focused on the long term picture. The best gains often come from patience, not constant trading, not emotional decisions, and not reacting to every headline. Sometimes the most profitable action is simply holding quality assets while the technology continues to develop and adoption continues to grow. Now, the fifth strategy I want to talk about is to use crypto to generate additional income. Putting certain crypto assets to work is another strategy that you can use. Some investors earn passive income through staking and other yield generating opportunities. Instead of allowing assets to sit idle, they generate additional returns over time. Now, this comes with risks. Different platforms have different levels of security and reliability. So, due diligence is extremely important. But the principle remains valuable. Whenever possible, look for ways to make your assets productive. Just as rental properties can generate rent, some crypto assets can generate additional income. The key is to understand the risks before participating. And the sixth strategy is to take profits and reinvesting them wisely. One mistake some investors make is never taking profits. An investment can go up to 500, 1,000%, even more. Then the market reverses and those gains disappear. Wealth accumulation isn't only about making money, it's also about keeping money. Sometimes taking a portion of profits and reallocating them into other assets can be a wise decision. For example, some investors use crypto profits to purchase dividend paying stocks, others buy precious metals, some start businesses, others reduce debt. The goal is not simply to watch numbers on a screen grow. The goal is to convert gains into real world assets that strengthen your financial position. Now let's talk about meme coins. The reality is that meme coins can move much faster than utility projects. Sometimes they attract massive communities, social media attention, and speculative capital that can cause prices to rise rapidly. Because of this, some investors allocate a small portion of their capital to carefully selected meme coins that they believe have strong communities, active development teams, or growing ecosystems behind them. But here's the important part. When those investments perform well, they don't simply leave all their profits sitting in meme coins forever, nor do they withdraw all of their gains for consumption. Instead, many use a portion of those profits to accumulate more established assets and strengthen their long term investment portfolio. For example, an investor might make a profit from a meme coin and then reinvest part of those profits into larger utility focused cryptocurrencies, infrastructure projects, blockchain ecosystems, or other long term holdings they believe have stronger fundamentals. In other words, they use speculative investments as a vehicle to acquire more long term assets. Imagine someone starts with $500 in a meme coin. If that investment grows substantially, they may choose to take some profits and move them into assets they intend to hold for years rather than months. This allows them to participate in higher growth opportunities while gradually building a portfolio that is increasingly focused on long term wealth accumulation. Of course, this approach requires discipline. Many people become emotionally attached to their winning positions and never take profits. They watch larger gains appear on the screen, then disappear during market correction. Successful investors often have a plan before they invest. They know their entry, they know their risk, and they know when they intend to take some profits. The goal is not simply to chase the next pump. The goal is to use opportunities wisely to accumulate assets that can potentially serve you over the long term. Remember, wealth is often built by converting temporary gains into lasting assets. Now, the seventh strategy is to continue learning. The crypto industry changes quickly. New technologies emerge, new regulations appear, new opportunities develop. The people who tend to do best are lifelong learners. They study, they read, they stay informed, they understand what they own. Knowledge is one of the most valuable assets any investor can possess. The more informed you become, the better your decisions are likely to be. Cryptocurrency has created opportunities that simply did not exist a generation ago. But accumulating wealth through crypto isn't about getting lucky. It's about having a strategy, accumulating quality assets, investing consistently, managing risk, thinking long term, and using profits wisely. If you found this video helpful, don't forget to like, subscribe, and share it with someone who wants to learn about building wealth through cryptocurrency. Thank you for watching, and I'll see you in the next video.